Part 2. Analysing the Opportunity. At Guardian, once we identify a suitable investment opportunity, a thorough due diligence is completed on the project. Guardian's comprehensive risk analysis includes 1. The developer and track record. 2. Market supply and demand. 3. Project feasibility. 4. Third-party verification. And 5. Downside risk management. 1. The developer and track record. We are highly selective when it comes to partnering with land developers. These developers have the valuable attributes of a strong track record, a skilled and experienced team, a strong balance sheet with a strong pipeline of developments in their portfolio, a proven record of buying opportunistic and distressed assets below market price, in-depth knowledge of the geographical areas they operate in, and the ability to provide Guardian and its investors with market competitive returns. This approach ensures our investments are backed by proven expertise and financial security. 2. Market supply and demand. Guardian's team conducts extensive, evidence-based research into market supply and demand dynamics, focusing particularly on Sydney's northwest and southwest regions. These regions are expected to see strong demand due to forecasted population growth, significant upcoming infrastructure projects described as once-in-50-year opportunities, limited supply of developable land due to slow rezoning, flooding constraints and lagging services like sewer and water. And we analyse current sales prices and projected future prices based on comprehensive supply and demand assessments. 3. Robust project feasibility. Guardian conducts thorough due diligence on the financials of the project and works on stringent internal ratios and hurdles prior to committing to the project. Every cost item is quantified and substantiated to ensure they are conservative. In a land subdivision project, the largest costs are comprised of the following: land and stamp duty, professional fees, statutory fees and charges, bulk earthworks and civil costs, and finance costs. Our revenue analysis employs conservative cost per square metre calculations, ensuring developers consistently exceed forecasted gross realisable value. Due to the supply and demand equation currently resulting in a Sydney housing crisis, the likelihood of material pricing fluctuations of land values is considered relatively low. 4. Third-party verification. This ensures that every aspect of our projects meet the highest standards of scrutiny and validation, with verification coming from top-tier industry professionals including valuers, planners, engineers and project managers, superintendents and lawyers. Guardian only has a small panel of accepted companies for the above professions, which are utilised by banks and top-tier listed lenders. 5. Downside risk management. To protect our investments and investors, Guardian employs several robust measures, ensuring consistent returns regardless of project timelines or cost fluctuations. One such method is using fixed annual returns and not target returns. Whilst many other funds have a target return, Guardian requires a fixed per annum return. If the project runs longer or costs and revenues are affected, Guardian and its investors continue to receive the annual fixed rate of return. This also ensures that developers are incentivised and motivated to complete projects as soon as possible. Security is taken as preferential shares in the landholding entity, which prioritises our investments and returns over developer profits. The waterfall of payments being 1. First mortgagee. 2. Guardian investment and return. 3. Developer profit. Sufficient coverage at the project's end is also ensured, with a minimum of 80% coverage at project completion. This is based on the amount required to pay Guardian and funds remaining to the developer. That is, if Guardian's repayment is $10 million, we ensure at least $8 million remain for the developer after Guardian and investors are repaid, providing a substantial buffer. Personal guarantee by directors is required, with Guardian only investing with companies of good standing and where all directors are willing to provide personal guarantees for amounts due to Guardian and its investors. This has been a non-negotiable condition in all deals, and the directors must have substantial net asset backing to support their guarantees. In the unlikely event of a developer's default, Guardian Funds has the first right to step in and complete the development project. In summary, Guardian's risk analysis and strategic approach ensure that our investments are not only secure, but also poised for high returns.